Hi all, it's 14 October 2021 today. I'm going to touch on the review of Tiger Brokers. Where is the button? Hi, this is just a quick introduction of myself. I monitor financial markets for over 18 years. You can read the rest here in this slide. Appreciate a like if you like this video and do subscribe to my YouTube channel. Here's a quick recap of Tiger Brokers businesses. Tiger Brokers, what is it? It's founded in 2014 as an investment and trading platform. It leveraged on its excellent community experience as well as user interface to facilitate investors and traders experience. Initial days was funded by Jim Rogers, Xiaomi, and Interactive Brokers. It has been expanding into relevant business vertical like ESOP management as well as investment banking activities like underwriting. And recent days, it's been applying for cryptocurrency licenses and Hong Kong trading license, which it applied since February 2021. What's the potential? With over 1.6 million accounts being opened and over 529,000 funded accounts, Tiger could definitely use its platform for cross-selling products like insurance, unit trust, and a lot of different products. And introduce Tiger Cards. Just my idea though. Will it be a next 10 baggers? Or will it be a next 30 baggers? Here's the share price chart of Tiger Brokers, and its price structure is relatively weak since July 2021. As compared to Futu, Tiger Brokers did indeed fall faster than Futu over the last 3 months at a faster rate. Right now, we have to see whether Tiger Brokers can hold above 9.65 USD this week so as to avoid another downleg to 7.8 USD. Remember, its IPO price was $8 back in 2018. Near-term price swing is definitely to be affected by market conditions as well as regulatory conditions back in China and whether are there regulatory concerns. R1 resistance level 1 will be 12.8 USD and R2 being 14.6 USD. Only then we will reassess to see whether is there further upside potential for Tiger Brokers. Since Tiger Brokers is the investment and trading platform, I'll talk about US, Hong Kong, and Singapore markets since they are so important. US market. July and August are good months for US equities market. September 2021 was a bit jittery. You see the big gaps, Nasdaq 100 correcting back by around 7 to 8%. Hong Kong market, well, definitely dipped badly with Hang Seng Index down over 10% in a 3-month period. And Hang Seng Tech was worse, it's down 25% over a 3-month period. Singapore market almost flat for STI for 3 months, closing at 3,086 as of 30 September 2021. But recent days, STI was strong, went back up above 3,100. Is it a buy the dip strategy or is it dollar cost averaging? Anyway, these two strategies are good for Tiger Brokers. Investing won't go away. This is just a series of regulations in China. Alibaba fine in April. Regulations on tutoring, youth gaming duration review. Some games approvers regulations, as well as Meituan being fined. Will there be more regulations over the rest of the year? What can save the day? Or who can save the day? Jack Ma reappears yesterday, isn't it, in Hong Kong? Alibaba share price. Well, we need to see whether Alibaba share price can be supported at 158 to 161 USD to give some indication of whether Chinese tech stocks have bottomed. Toto, if it can cross over your 100 USD, it's also a positive sign. Here is a quick recap of 2Q results. So what's the conclusion for Tiger Brokers? At least it's income neutral for Tiger Brokers in 2Q. Viewers can actually look back at one of my YouTube videos on Tiger Brokers for a recap on this. Here is the relative price performance of Tiger Brokers against Futu. You will see that Tiger Brokers is in red and Futu in blue. While Tiger Brokers is up 30% on a year-to-date basis, whereas Futu is up 81% on year-to-date basis. Here's the 6-month chart of Tiger Brokers against that of Futu. Tiger pullbacks at the same rate over a 6-month period. Period of performance for Tiger is very obvious when risk-taking appetite in the general market is strong. So you'll see that, well, Tiger Brokers can go out as high as over 50%, whereas Futu is almost flat on a 6-month basis, using a 6-month basis mark. However, when risk-taking abates, Tiger pullbacks faster when risk-taking appetite falls. Tiger drops by 47%, whereas Futu is down 38% over a 3-month period. Question to ask is if Chinese regulations are going to slow down or market panic over regulations abates. It depends on one's view whether market has finished panicking over the regulations. Are you a long-term investor or just a trader? One really has to think through whether you are investing or trading because at different time frames, different way of operating will work. Over the long run, if the business fundamentals are intact and the industry outlook is fantastic, investing for the long time frame may actually increase your odds of winning. As always, this should not be construed as any investment or trading advice. Do stay tuned and subscribe to my YouTube channel so that I can be kept updated promptly when I release new videos to reflect the changing market conditions. As always, thanks a lot.